This is Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to open under pressure despite Wall Street narrowly extending record highs as Alphabet's results stoke confidence in the AI boom. President Trump says it's not necessary to fire Fed Chair Jay Powell, but again presses for lower rates as they tour the central bank's building renovations. Also ahead, Thai fighter jets hit targets in neighbouring Cambodia as a long-running border dispute escalates.
And coming up later on Bloomberg Tech Asia, an exclusive deep dive into Samsung Electronics will give you a rare look inside their digital city in Suwon, the company's global research, development and innovation hub. And we hear from President and Mobile Division COO Won-Joon, plus EVP and Head of Smart Things Tae Yeon-jung. That's at 8:30 Hong Kong and New York time at 9:30 a.m. in Seoul. But of course, Heidi, we continue to follow the latest developments on those trade negotiations on all of these different fronts. When it comes to South Korea, we're now learning from sources that we could potentially see an investment fund into American projects. Now, local media saying that could amount to at least $100 billion. And the focus right now in those conversations around a 15% tariff rate is something that's already been discussed with the European Union as well. And we know that Thailand is also getting close to an agreement with the U.S. to lower that threatened 36% tariffs. We have seen the Thai baht rising to the highest in more than 3 years under a little bit of pressure because of that border dispute with Cambodia, while Malaysia also wants tariffs of less than 20%.
Yeah, we're watching sort of a flurry of activity, although nothing sort of really confirmed yet, with a number of these deals sort of very much still up in the air before that August 1st deadline. We have heard from President Trump saying that, 15% is probably his baseline, but potentially could go all the way up to 50%. So there would be some countries that imagine going forward, hoping that this kind of deal that Japan had might serve as something of a prototype. But of course, there's so much sensitivity in terms of market access. You mentioned the EU. They're seeing progress towards that 15% tariff. Potentially being the baseline for the deal for most imports. It's according to diplomats that were briefed on these ongoing negotiations. Steel, aluminium imports above a certain quota would face a higher tariff of 50%, according to that same source. But we also know, of course, the EU is preparing countermeasures in the case of a contingency that this doesn't work out, including a package of tariffs of more than 90 billion euro worth of American goods if they don't hit that deadline. You mentioned Malaysia. We're also watching Vietnam as well, seeing the tariffs potentially cutting up to a third of US exports. So between 20 to 40% export revenue by up to $37 billion would be affected. That would hit a major proportion of Vietnam's key industries. So this sort of goes to, what could potentially happen even when some of these countries do reach what is considered to be a tariff and a trade compromise.
At least it comes to the optimism that we're seeing in the markets when it's about this movement forward in at least a positive direction, right? I mean, the uncertainty is still there, but the fact that we are talking about these trade deals coming into place, we are now seeing that upside with the Nikkei having risen the last two sessions. We continue to see futures up 0.2%. We have the Japanese yen weakening in the overnight session. We continue to digest those trade negotiations and the deal that was achieved by Japan, which has included more than $500 billion of investments into U.S. projects. We are going to get Tokyo CPI numbers, an indicator of national prices as well. So do watch out for that later this morning. But take a look at how we are expecting U.S. futures to look like after we saw that record high achieved in the overnight session. Remember, a lot of optimism as well coming from these tech earnings. We had Intel giving an upbeat sales forecast. We saw PC demand improving a little bit, not to mention that data was also more solid. U.S. jobless claims falling for 6 consecutive weeks. So we actually had Treasury yields rising. We also had the dollar rising after 4 sessions of losses. Take a listen to what President Trump also had to say about what the Fed chair should do. Of course, that's been having a big impact on the markets.
There's no pressure. No. We want to have, his term comes up soon. I think he's going to do the right thing. Everybody knows what the right thing is. Even people that believed in, the higher rates, they're all on board. They all want to see the interest rates come down. It's very important.
Well, let's bring our executive editor for Asian markets, Paul Dobson. And so there's sort of to and fro when it comes to pressure on the Fed and what we're hearing from President Trump on, the tenure of Fed Chair Jay Powell continues to play out. What is the market looking at the moment? Because it's sort of brushing off some of these trade uncertainties, brushing off the Fed uncertainty. Is it all about optimism over earnings at the moment?
Well, we're in the middle of earnings season, so people are definitely paying attention to that, and that's moving individual stocks and setting a little bit of a tone, particularly the tech, and how far that AI story can run. We had the good earnings results from Alphabet, and that gave everybody a little bit of a boost. But I think, until we get to the August 1st deadline with the trade tariff negotiations still going on, that's going to be the primary point of concern and interest for everybody, in particular the European Union. Can they get a deal? That's quite a hefty chunk of the US. And then what does it look like for everybody else that we're still waiting to hear from? And I think for our region, what's going to be really interesting is those that haven't got a deal yet. Are they going to come under more market pressure as we get closer if they don't manage to find something? So looking at South Korea, looking at Taiwan, and looking at India in particular, those three as the sort of laggards. I think that sort of sets the tone still for us. But next week is going to be extremely busy. Not only do we have that August 1st deadline coming up, we also have, as you mentioned, the earnings, and we've got the Bank of Japan here. We've got the Federal Reserve policy decision there over in the US. And as you said, there is that sort of pressure on the Fed to cut in the background. People aren't really treating this month as being a particularly live meeting, but I think that we'll wait to hear what they have to say about when a cut may be more likely come in the coming months. And that's going to be the next sort of step forwards, I think, probably in terms of how the market thinks about the second half of the year.
Yeah, and the ECB already held rates steady, right? When it comes to next week and those central banks that you mentioned, do we have an indication of how policymakers are right now seeing the latest developments on trade and how it will weigh on their monetary policy decisions?
They do need to wait for that, of course. And although Christine Lagarde seemed pretty optimistic about the way that the economy was going, there was also that caution about we don't know exactly what the trade deal is going to look like and what that might mean for the inflation outlook in the second half. The ECB, though, as you were saying, sort of gave the idea that it was done cutting for now and going into a little bit of a pause and wait and see mode. And we've all been in wait and see mode on these tariffs for several months now, and that does make that policy making very difficult for the central banks. I think over in Japan it's going to be really interesting as well. Now, they have that deal and they have a little bit more clarity. Is he going to push them closer towards the next hike? Remember, in hiking cycle over in Japan, inflation is still very high. And we started to hear some noises that maybe there's a little bit more certainty and confidence that they can move forwards with their monetary policy objectives now that those negotiations are out of the way. Maybe this month is too soon, but maybe quite before too much longer we'll get that. That would be helpful in some ways for those longer-term bonds which have been really under pressure in the market recently. If it brings inflation, if it brings down the inflation outlook, it brings inflation under control a little bit more.
Executive editor for Asia Markets, Paul Dobson, there with an outlook on, of course, what to expect in the following week as we get those central bank decisions. And we're talking about Chair Powell, about the Federal Reserve, and President Trump also pressing Powell to cut interest rates while taking a tour of renovations at the central bank's Washington headquarters. Trump and Powell traded barbs over the cost of the project, with the president joking that he would usually fire a project manager overseeing similar cost overruns. Even so, Trump said that he doesn't necessarily plan to fire the Fed chair.
To do that is a big move, and I just don't think it's necessary. And I believe that he's going to do the right thing. I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing.
And in the post-market session, we're also following Intel shares reversing earlier gains to fall more than 4%. This after CEO Lip-Bu Tan struggled to give a clear picture of how he'll make the company more competitive. That's despite a stronger than anticipated revenue forecast for the current quarter. Bloomberg senior executive editor in technology Tom Giles joins us now from San Francisco. Tom, let's start with perhaps the bright spots, because at least when it comes to the industry, personal computers seem to be improving.
That's right. The stock rose Immediately after the results were released, after hours here in the U.S., there were some bright spots, as you noted. That revenue came in high, and the revenue forecast came in higher than expected. There is some hopeful signs around PC demand. They are still a big provider of PC chips. And what you saw and what we're seeing here in the U.S. was a big boom in purchasing of PCs in advance of the tariffs that we keep talking about and that the Trump administration continues to threaten. So there was a lot of PC buying that served them well in the short term. Lip-Bu-Tan also talked about a lot of pullbacks in terms of building of factories in Ohio, slowing that down, and putting plans for factories in Europe on hold. These are the kinds of financial disciplines that a lot of investors really do like to see. The problem with Intel is that as much as you cut costs, and he also talked about cutting staff by 15%, confirming the scoop by Bloomberg reporters several months ago. Those are all the kinds of things that investors want to hear when there's a company that's been spending too much. The problem with Intel isn't just about overspending, though. It's about innovation and a lack thereof. They are lagging far behind their competitors in the most advanced AI chips. They're nowhere to be seen. And they're getting lapped even by there for a long time. AMD was a smaller competitor, and now AMD is more than twice as big market capitalization speaking. And then NVIDIA is just running away with the advanced AI market, and Intel is nowhere to be seen. So you can cut to the bone like Lip-Bu-Tan is doing. But what are you going to do about making Intel more competitive when it comes to AI chips? And that's one of the big things that the market cares so much about right now, and you're just not hearing it from him just yet.
Structurally, the problem is that they use a lot of offerings from TSMC, right, which of course then adds to the margin pressure. Is there anything fundamentally different they could do to their foundry business to change this trajectory?
I mean, Lip-Bu-Tan's predecessor, Pat Gelsinger, did talk about getting into the foundry business where they would be the ones who make the chips on behalf of other companies. That is certainly something that they are doing, but it's really a drop in the bucket at this point. And as he noted on this call, some of those fabs that they are in the process of building, they're just slowing that down a bit. Again, it's about your own chips and their ability to design the most advanced chips for AI. That's the big question mark that's overhanging them right now.
Bloomberg Senior Executive Editor in Technology Tom Giles there joining us with the latest on Intel. And coming up on the Asia Trade, HSBC and 10-Cap joining us to take a look at the economic and market moves as the clock continues to tick down on the Trump tariff deadline. Plus, later in Bloomberg Take Asia, Susquehanna explains why they're holding a neutral rating on Samsung. Much more ahead. This is Bloomberg.
As our cooperation has deepened, so have the imbalances. We have reached an inflection point. Rebalancing our bilateral relation is essential. Because to be sustainable, the relations need to be mutually beneficial.
European Commission President Ursula von der Leyen speaking to President Xi Jinping in Beijing during their first in-person summit since 2023. Let's bring in our China correspondent, Mimi Lo. Mimi, there we could hear Ursula von der Leyen talking about the trade imbalance. Already the relationship pretty strained, and this is still a major point of contention.
Yes, she said it's an inflection point, and I guess it's still not very clear whether this inflection point would mean an improvement in relationship after this or a deterioration, because, as you said, trade imbalance is still a very important issue that the EU has brought up. Ursula von der Leyen talking about how the EU will not be able to maintain the same level of openness that it currently has if China doesn't address things like the overcapacity issues or open up its market even more, and also end what the EU is calling unjustified retaliatory moves when it comes to the investigation into EU brandy, pork and dairy. But President Xi as well also calling on the EU to open up its trade and investment markets and creating a better and more friendly environment for Chinese businesses. And so both sides really have their litany of complaints here. And for now, both sides have agreed on a mechanism to address the bottlenecks when it comes to the export licenses for critical minerals. The Chinese side also agreed on ensuring reciprocity when it comes to public procurement contracts. But beyond that, whether or not this is going to actually lead to the rollback of some of these investment restrictions or tariffs on Chinese EVs, for example, we don't really have a very clear indication at this point.
There's a long trade and diplomatic history between the two sides, right? Are we seeing that commonality arise in these talks?
Yes, there is one area of common interest, which is on climate change. Both sides had made a new declaration on climate, agreeing to update their climate plans ahead of the COP30 summit at the end of this year. And that is one area where there is a symbolic show of unity here, which is quite critical given that the U.S. has pulled out of the Paris Climate Change Agreement under President Trump. But there are still other big areas of contention, right? Aside from trade, there is the issue of China's support of Moscow, at least diplomatically, although China has denied helping Moscow in a very material or military way. But still, this is an important issue, one of the most important issues for EU citizens if you look at the EU Barometer survey. And so this is something that Ursula von der Leyen also pushed China on to use its leverage on Russia to help end that war in Ukraine.
Bloomberg's China correspondent Min Lo there. The former Australian Prime Minister Malcolm Turnbull says more world leaders should be putting their country's interests first and standing up to President Trump. Let's get more on his comments in a Bloomberg interview and bring in our economy editor Michael Heath. And the former Prime Minister has often been quite critical in terms of how this relationship has been handled. We know that President Trump has his own views on Mr. Turnbull as well, but what are we hearing at the moment?
Yeah, well, I mean, look, Malcolm Turnbull has he's always shot from the hip kind of thing. And I think that, look, there's a general view, and it's, excuse me, it's very easy for former Prime Ministers to say these sort of things, that Australia needs to sort of till a more independent path than it has, and to sort of create a bit of distance, I guess, with the US. But it's it's a very easy thing to say when you're out of office, not when you're sort of responsible for the nation's security and things like that. So Malcolm Turnbull, in many respects, has sort of said these sort of things before, and and no doubt will say them again. He's very, very eloquent. He's very, very smart. So it is always very interesting to listen to him. But in a way, Australia having to sort of navigate this move between the US and China is sort of going to be an ongoing discussion and debate.
An ongoing criticism over the AUKUS deal as well, and it comes at a time when we're seeing sort of a doubling down, and perhaps understandably so, given the immense pressure that we're seeing from the Trump administration. Yeah,
well, I mean, we've got the what's called the AUKMIN talks, all these acronyms that we have, between the UK and Australian defence and foreign ministers today, and they're actually going to hold a press conference at Admiralty House across us from the harbour here, where they're going to, it looks like there's going to be some sort of shipbuilding and defence industrial base agreement that's going to be signed between them, and the aim is to sort of, it seems, is not only to keep pushing ahead with AUKUS and these nuclear submarines that Australia's due to get hold of, but I guess to signal a degree of intent to Washington that both sides, the other two parties, are very, very serious about this. We do want to go ahead with it. The UK does as well, and that the US, which is reviewing AUKUS at the moment to just see whether it fits with President Trump's strategy, whether it should go ahead. So it's a signal of intent here.
Bloomberg's Michael Heath there as we continue to look at this 50-year treaty, including a $41 billion pledge to scale up industry across both the UK and Australia for these new submarine fleets. So we get more ahead on the Asia trade. This is Bloomberg.
The UN Security Council will reportedly meet on Friday to discuss the rapid escalation in the border conflict between Thailand and Cambodia. At least 14 people were killed on Thursday when Thai fighter jets struck Cambodian military targets, and both sides traded fire across the border. Bloomberg's Avril Hong joins us now from Singapore. And Avril, this has been seen as one of the worst escalations in over a decade. What do we know at this point?
Yeah, the situation in the border dispute between Thailand and Cambodia has actually been relatively calm since a deadly clash in 2011. But things changed in May following a conflict. And then since then, both sides have been massing troops along the border. And it sharply escalated this week with Thai soldiers getting injured in a landmine explosion that they say these landmines were freshly planted. Cambodia maintains that this was from old conflicts. And then in the past day, we've seen an incredibly sharp escalation of the conflict. It kind of culminated in Thailand using its F-16s to strike Cambodian military posts. Both sides have since been trading accusations that the other started it, and we've seen evacuations of thousands in the border regions. About a dozen civilians have been killed on the Thai side. The casualty numbers on the Cambodian side remain unclear, and we've also since been hearing that the UN Security Council is set to hold a meeting on the conflict. This is something that Cambodia has been urging, while Thailand has said that no talks can happen until the fighting stops. It also says that this so far is not a declaration of war.
What have we seen in terms of the international response?
Yeah, I think it's worth keeping in mind that Cambodia has sort of sought the help of the International Court of Justice to resolve the issue. And this is something that is a bit tricky because Thailand does not recognize the court's jurisdiction. We've also seen the US as well as ASEAN leaders sort of weighing into this, calling for dialogue, a stand down from both sides. If anything, something that actually this latest conflict represents a sort of diplomatic opening for China that has seen increased influence politically and economically in both Thailand and Cambodia as the US steps back from the region. But many also point out that it's unlikely, Beijing is unlikely to take a direct approach to pressure either side, and that it might play more of a background role in all this. And indeed, we've already been hearing from Beijing saying it's deeply concerned and it's urging dialogue to end the conflict.
Avril Hong there. Some of the other stories that we're following this hour. Israel and the US are withdrawing teams from ceasefire negotiations with Hamas, citing the group's unwillingness to agree to terms. President Trump's envoy, Steve Witkoff, says Hamas showed a lack of desire to end the war. Israel's Benjamin Netanyahu has said any deal must include Hamas surrendering and giving up control of Gaza. Talks had aimed to secure a 60-day truce and the release of remaining hostages. French President Emmanuel Macron says France will officially recognise a Palestinian state, becoming the first G7 nation to do so. He announced the move ahead of a planned speech to the UN General Assembly in September. Macron says France remains committed to what he describes as a just and durable peace, while calling for an urgent ceasefire. More ahead on the Asia trade. This is Bloomberg.
We have breaking news out of Japan. We are getting the Tokyo CPI numbers. Core CPI, excluding fresh food, coming in at acceleration of 2.9% for the month of July, falling below that 3% level. It had stayed above that level for the past 3 months. It's also coming in below economists' expectations. The headline number, also growth of 2.9%. Exclude not only food, but also energy, and you get core CPI of growth of 3.1%. That is staying in line with expectations and above that 3% level. Of course, the high cost of living was a key issue for the upper house elections over the weekend, where Prime Minister Ishiba lost the majority in the upper house. And it is very closely watched by the Bank of Japan. We do get that rate decision next week. No change expected. BOJ watchers expect a change as soon as October or January. Take a look at how broader markets are trading at the moment, because the Japanese yen is holding steady at that 147 level. We have seen significant weakness against the U.S. dollar overnight, and you can see Nikkei futures pointing to the downside of 0.4% after an incredible rise, given that we had seen that U.S.-Japan trade deal with 15% tariffs on Japanese goods. You can see ASX futures also at the moment pointing down 0.5%, Heidi.
Let's get some more when it comes to the ongoing economic impact of trade negotiations, all of the uncertainty between the US and various nations around the world. We're just a week out before that August 1st deadline, of course. We just had an update from South Korea suggesting that both sides are working hard to achieve some sort of deal, but that is not obviously coming to fruition, at least today. Joining us now is Janet Henry, who's a global chief economist at HSBC. Janet, really great to have you with us. At time of enormous uncertainty, but also, I'd imagine, quite a bit of fun for economists trying to model around all of the different scenarios. Are you feeling as sanguine as financial markets seem to be, that things are only going to progress when it comes to trade, and at the very least we're not going to go back to sort of, so-called liberation day rates?
Good morning, and it's a pleasure to be here. As you say, it's a fun time for economists. It's certainly keeping us busy, giving us plenty to talk about, but the key point is one of uncertainty. And it's interesting, you mentioned financial markets. Equity markets, the US equity market, at least for dollar investors, and global equity markets are taking a pretty sanguine view, because the fact is the global economy has been relatively resilient relative to expectations just a couple of months ago. And they do seem to be taking the view that the worst case scenarios regarding tariffs and trade now have a much lower probability. Also, they've priced in some expectation of quite a lot of rate cuts. The market's still expecting about 5 Fed rate cuts by the end of 2026. So if one of those factors change, if we do get worst case scenarios on tariffs, we do get some higher tariffs, or if the US economy slows down more materially, but perhaps with higher inflation, so you don't get the rate cuts, then obviously even equity markets would have to question the outlook. And actually, maybe the dollar, maybe bond markets aren't quite as sanguine as equity markets seem to be.
No, certainly not at the longer end of bond markets at the moment. But when it comes to not quite seeing the economic impact yet, is that just a pass-through situation? Do you think the risk is that in the coming months the data will start to show, both in terms of confidence and inflation, that there is an impact?
Well, to some extent we saw it in the June inflation data. The headline number, if anything, was lower than expected, because actually what you're finally seeing in the US is the housing component of inflation is starting to moderate. But when you look in the weeds of the consumer goods data, finished goods, particularly those from China, you saw it in household appliances, you saw it in audio equipment, and these are prices that have been persistently falling for the last few years. Suddenly they rose on the month by about 10%. So you are seeing some signs of certain items where there is a pass-through, particularly of finished goods. But some of the uncertainty regarding tariffs relates to intermediate goods components, the tariffs on aluminium and steel, potentially on copper, maybe on certain areas of pharmaceuticals that could be quite hefty, and they tend to pass through over time. So you've seen it in the data already, the front loading. So in anticipation of tariffs, you buy a lot more. Consumers have been front loading. And now the question obviously is whether the labour market slows down, or indeed you see more of the inflation numbers actually squeezing spending power, but also pushing up inflation expectations, putting the Fed in that very difficult position. But I think we will see it. Calling the exact timing, both in the US and what it it means globally is the really difficult call. We think you'll see it before the end of the year. You probably will see it in the coming months.
Do you have any indications of where the Bank of Japan might go, given what the Federal Reserve is doing, and now that we have a trade deal with 15% tariffs on Japanese goods, too?
I mean, it's interesting you say now we have a trade deal with 15% tariffs on goods. Tariffs are a lot higher than they were. They're just not as bad as had been feared back on April the 2nd. So we find, everyone's celebrating the fact that we've only got 15% tariffs on Japan. But I think, what you've seen in Japan is higher inflation. A lot of it driven by the near doubling of rice prices. And people hate those kind of inflation releases, those everyday items that they tend to buy. It feeds through to their inflation expectations. So it's kind of the wrong kind of inflation. Obviously, what we've been hoping for, and there are some signs of it coming through, are a more self-sustained improvement in inflation, particularly on wages, and there are signs of that coming through, so the Bank of Japan can normalise policy. So, yes, we do expect the Bank of Japan, obviously not imminently, but before the end of the year, most likely in October, will be able to raise rates once more this year. So, still getting there gradually, but it will be helpful, obviously, if the rice price inflation continues to moderate and you get more of the sustainable inflation rather than a cost shock.
Janet, when you talk about, of course, the tariff rate here in Japan being 15%, which, yes, to your point, is higher than it was. But do you also consider perhaps a relative impact, say, as opposed to South Korea? The Koreans are trying to lower their tariffs to the rate of Japan because they compete in similar goods, right? So if they have a competitive disadvantage in auto sales to the U.S., for example, that would be comparatively not as great. Is that something that, as an economist, you keep an eye on, these relative tariffs as opposed to just the net impact of what the levies do to one economy?
Yes, absolutely. That's a really important point. I mean, the fact is different countries compete with each other, but there are other factors other than tariffs that relate to that. Currency moves, the level of the exchange rate can matter as well. Also, the position of different countries' relative performance even before the tariffs take effect. And Korea's exports certainly haven't been quite as strong on a number of items than, for instance, Taiwan or certain areas of Japan's exports. So all of these factors come into play. But you're absolutely right. 15% is the new aspiration rather than getting back to just a couple of percentage points. But when you look at the data, it's still going to be very, very hard to read, and it's still going to be very difficult for companies to plan in advance if they don't know what tariffs are going to be tomorrow, next week. And don't forget, on the tariffs, we've still got this court challenge that's underway in the world regarding the use of emergency powers to impose these reciprocal tariffs altogether. And that could go all the way to the Supreme Court. And it seems like we're constantly waiting for the next deadline. Now it's August the 1st. There are other deadlines that are later in August. There are others that might extend in the course of the year. So all of that does play into the uncertainty angle and the difficulty for companies trying to navigate the course, shipping things that they don't know what the tariff will be by the time it actually arrives in the United States. But you're right, relative performance between economies in similar goods can make quite a big difference.
And we've seen from the first Trump administration that tariffs tend to compound and endure, right? Have we sort of taken a look at what the longer term impact is going to be, even perhaps with a change in government?
Well, it's a good question regarding the longer-term impact because, what you saw for, a couple of decades or more, certainly up until 2018 with the first Trump administration, there was quite a big relative price change because you were reducing frictions in world trade. The US saw persistent declines in goods prices of 1%, 2%, sometimes 3% per year, and that was a boost to real incomes. They were spending so much less on goods goods prices. They had strong growth, and in many ways that supported their spending on domestically produced services in what is largely a service sector economy, the United States. The industrial sector is less than 10% of GDP in the US. So the longer-term implications would be that people perhaps will buy less on goods. Goods are more expensive because the US can't produce all of these goods themselves immediately, and so actually it can dampen the ability to spend on other areas of the economy, service sector spending in particular, and also at the more macro sense, it means lower growth, higher inflation, and interest rates being higher than they would have otherwise been.
Janet Henry, who's a global chief economist at HSBC, here with us. And Shery, we've got a great lineup when it comes to the tech show.
Yeah, coming up, we actually hear exclusively from Samsung President and Mobile Experience COO Won-Joon on the impact of tariffs and their strategy to stay ahead in the foldable smartphone market. That's coming up. This is Bloomberg. Samsung says it welcomes competition in the foldable phone category as the electronics giant awaits an entry from an arch-rival Apple. We spoke exclusively with President and Mobile Experience COO Won-Joon at their Suwon headquarters about their latest devices and the impact of tariff threats on supply chains.
You know, rather than focusing on competition, I think we have been focusing on our consumers. What are the experiences that we can bring to the consumers and how complete they are? So we've been focusing on those. And I think healthy competition with other companies I think will bring more innovations and then bring more benefits to consumers. So we are welcoming kind of others to join this category, which we created back in 2019.
When we see the pressure on Samsung semiconductors and we see the success in mobile, does that change your thinking about how heavy your shoulders are at this point?
No, I mean, our pressure has been there for all the time. I mean, nothing has changed. And I think there's a, I think Samsung is one of the companies who has every aspect of this supply chain. Not only from the components to all the way to the devices and also application and services. So we believe there will be a big synergy we can have across all these different business units, and we'll continue to kind of utilize this complete ecosystem that we have.
Let's talk a little bit about the tariff concerns around the world, because President Trump says that potentially there could be a 25% tariff on Samsung phones not produced in the United States. How are you preparing for that?
Very good question and tough one. So Samsung has long established multiple manufacturing facilities in key regions around the world. That kind of gives us a flexibility in dealing with or responding to any changes in other countries' kind of trade policies, not just the US. So we have established that kind of a flexible system. And in regard to this potential tariff by the new US government administration, there are a lot of still uncertainties.
We have seen that deal that at least brings down the threats of tariffs from more than 40% to 20% for Vietnam, which is a huge manufacturing base for Samsung. Mm-hmm. How do you see the developments and how much of a benefit could that be? Or does it still hurt because it's still higher than it was originally at average 3%?
These new tariff policies obviously are very challenging to us in terms of business. And the mention about the Vietnam, obviously the lower the better, but also as I mentioned, we do have multiple locations, multiple manufacturing capabilities, and over the past few months, we've been working very hard to make sure the products that are bound to US can be manufactured in any of the locations, not any, but in multiple locations. So depending on So we're looking at the Vietnam, but also we are looking at Korea, India. I mean, what will be the final tariffs? So as I mentioned, we're going to just do a lot of optimization according to the final numbers, but the lower the better.
Is that easy to adjust production?
That we have been working very hard to make sure once you make that decision, that can happen really quick. So we've been doing a lot of preparation.
And you'll hear more from that interview with the Samsung president in the next hour. Plus, insights on Samsung's broader tech empire, including chips and its smartphone homes ecosystem. The latest episode of Bloomberg Tech Asia starts at 8:30 a.m. Hong Kong time. That's 9:30 a.m. in Tokyo and Seoul.
Shery, let's take a look at some of the corporate headlines that we're following as well. Paramount shares rising in late trading after the Federal Communications Commission approved its merger with Skydance. It concludes a year-long saga that included settling a lawsuit with President Trump, as well as concessions on diversity initiatives and news judgment. With backing from Redbird Capital Partners, Skydance will merge into Paramount and make an investment of more than $8 billion in the company. Shares in German electronics retailer Seconomy soared after it confirmed advanced talks to be acquired by JD.com for $2.6 billion. The offer price represents a 23% premium to its Wednesday close. In a statement, Seconomy said that no binding agreement has been signed so far. Alphabet's Google has inked a $1 billion deal to provide cloud computing services to software firm ServiceNow. Sources telling Bloomberg ServiceNow committed to spending $1.2 billion over 5 years as part of an agreement. Earlier this year, Google also added OpenAI as customer and secured a $2.5 billion commitment from Salesforce. We do have more ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to the commodities complex. Of course, investors in this part of the market also very much watching out for trade developments as we get closer to that August 1st deadline. Take a look at how we're trading when it comes to crude markets. A little bit upside there, just over $66 a barrel when it comes to trading in New York. Oil steadying after seeing its biggest gain in a week on optimism that we could see more progress when it comes to these trade talks ahead of the deadline. We're also seeing some tightness when it comes to diesel markets boosting sentiment there as well. We did hear from the likes of the Indian Commerce Minister saying that he's optimistic that India could get a deal with the US, Brazil, Mexico also looking to broaden trade ties. We're seeing these ongoing talks with South Korea as well. All of this as crude has really been on that holding pattern this month, but still down this year on that increased supply picture from OPEC plus. The looming glut is always sort of in the back of the picture there. We're also watching iron ore, which of course had quite a run lately, but we've seen iron ore really pulling back from those 5-month highs. Some of the supply also still making capacity concerns of China have waned a little bit there. We've also had news of a potential steel tariff deal with Trump, but Keir Starmer has been downplaying that a little bit. But exports, when it comes to Australia, has really risen to a record at the biggest bulk export terminal in Australia in June. It really is a sign of ample seaborne supplies, and we're seeing a little bit of downside there when it comes to Singapore-traded iron ore. Also watching precious metals there, as well as the likes of gold and silver, but at the moment we're seeing a bit of upside or just sort of flat trading when it comes to gold at the moment. We have seen gold dropping as some of the latest US jobs data really pointing to resilience still in the US job market. The views that the Fed will keep policy on hold for now. We've also seen some outflows when it comes to Chinese ETFs tied to gold as well. That's been weighing on sentiment in the market. So at the moment looking pretty flat after, of course, has been, an enormous run-up of more than 25% so far this year on account of all of this trade uncertainty, Shery.
And those jobs numbers, the jobless claims falling for 6 consecutive weeks, really having an impact on the Bloomberg Dollar Index as well. We're talking about the dollar rising after 4 sessions of losses already, Treasury yields gaining ground as well. And all of this as we continue to follow, of course, all of the ramifications around the comments from President Trump on having Chair Powell fired. But, of course, those comments and that rhetoric ongoing and what that means for sovereign debt markets, not only in the U.S., but also around the world with the fluctuations in the greenback, key point that we're watching at the moment. But also, given all of these central bank conversations, we also saw the euro sort of erasing earlier losses, traders pulling back on bets that future rate cuts were still on the table. The ECB held borrowing costs steady, and we heard from President Christine Lagarde that she and her colleagues are now in a wait-and-see mode. Of course, the economy in Europe having performed in line or even slightly better than expectations, so sources now thinking that perhaps September will also be a hold, Haidi.
And, you know, as we continue to watch the Fed, as we continue to watch these trade negotiations, geopolitics also at the forefront as some of these traditional allies seeking to kind of deepen their pacts in light of pressure from the Trump administration. We are looking at the Prime Minister here in Australia, Anthony Albanese, in Sydney today with his Deputy Prime Minister, Minister for Defence, Richard Marles. The Foreign Affairs Minister, Penny Wong, is also amongst them. They're set to meet with the Secretary of State for Foreign and Commonwealth Development Affairs, that's David Lammy, MP, as well as the Secretary of State for Defence in the UK, John Healey, is here on that trip as well. We've already heard some announcements when it comes to some of the deepening pacts, particularly for defence in respect of what's really kind of become a point of controversy in terms of the AUKUS agreement, but this 50-year AUKUS support in a sort of message to Trump is being seen there, and you are seeing some of those key personnel heading into those talks with the Secretary of State for Foreign Affairs, David Lammy, there, and the Secretary for Defence, John Healey, to meet with the Prime Minister, the Minister for Defence, as well as the Foreign Minister. So all of this is going on. It's quite interesting because we know that when it comes to the way that President Trump negotiates, he puts all of this sort of on the table as well, right? And there's been huge pressure from the Trump administration in terms of criticism and looking over the, I guess, the usefulness and the sustainability of that AUKUS deal. And we're seeing now some of the other partners like Australia and the UK really doubling down on their commitment, that treaty to include a $41 billion pledge to scale up industry in both countries there. This after we've seen that $800 million payment to the US to support its shipbuilding as well. All of this is sort of sitting on top of all of the uncertainty when it comes to trade too.
Yeah, I mean, when it comes to these trade negotiations, it almost feels like all of these trading partners are buying these trade deals out of the United States. We, of course, saw the Japan investments of more than $500 billion US dollars. And we're now hearing from sources that perhaps South Korea is also weighing a fund of more than $100 billion. So we'll continue to watch the developments. Right now, it seems that those conversations are focused around a 15% tariff rate, both for South Korea, also for the European Union. Take a look at how we're setting up for the futures, and the market opens in just 5 minutes. We can see that Nikkei futures are pointing to the downside after an incredible rally since we got the Japan-U.S. trade deal. U.S. futures also pointing to a little bit more upside after stocks rose to record highs. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens and still digesting the latest trade headlines. Haidi, of course, we are still awaiting any deal between the U.S., India, Europe, South Korea. When it comes to South Korea, we're hearing from local media that perhaps we could see an investment fund into U.S. projects of at least $100 billion. The conversations focus around a 15% rate for tariffs, similar to what's been discussed with Europe and what was agreed already with Japan.
Shery, over here it's a bit more about beef, or perhaps a lack of beef that has been in place between the US and Australia. And of course we know that the government lifting that de facto ban. We're hearing from President Trump at the moment saying that countries that refuse our beef are on notice, that we're going to sell so much beef to Australia after Australia accepted American beef. But domestically, I can't say there's been too much enthusiasm for accepting that American beef.
Yeah, American imports, so important in these trade negotiations here in Japan. Of course, it was autos, it was rice. Take a look at how we're opening the session today, because we're seeing downside pressure after that incredible rally for Japanese stocks already after that trade deal with the United States was achieved. We continue to see the Japanese yen a little bit weaker against the U.S. dollar, holding steady at that 147 level. And remember, July is supposed to be historically, on average, a strong month for the Japanese currency. Usually a gain of around 1% against the greenback. We're not necessarily seeing that right now because we've lost around 2% or so against the dollar already this month. We are still digesting the Tokyo CPI numbers that just came out a few minutes ago. Core CPI coming below economists' expectations, growth of 2.9% for the month of July, and also falling below that 3% growth rate that we've seen for the past 3 months. Of course, an indicator for nationwide prices, and very important for the Bank of Japan, which decides on policy next week. Take a look at how Korea is also coming online, because we continue to watch those sectors very much affected by tariffs. And we're talking about autos, of course. And I just mentioned that Korean authorities are trying to negotiate the trade deal with the United States as well. They want that 15% tariff to be on autos as well. The Kospi and the Kosdaq not doing much at the moment, and the Korean won holding steady after it gained ground in the previous session against the greenback. Heidi.
Take a look at what we're watching when it comes to Australia's stocks and other assets just coming online there. We're seeing a little bit of downside when it comes to trading in equities as we get really into the staggered open. The Aussie dollar, though, holding onto that firmer footing, but just sliding under that $66 level that we've been sitting at for a while. Also watching treasuries. This is we see sort of still that resilience when it comes to US jobs numbers as well, right? That's sort of putting a little bit of cold water on Fed expectations. Here in Australia, we're also watching some of those agricultural stocks, particularly as we continue to get reaction to that removal of the de facto beef import ban from the US. We're hearing now from President Trump talking on his social media, saying that we're going to sell so much beef to Australia that other countries that refuse US beef shipments are on notice. Domestically, there's been quite a bit of pushback from farmers to restaurateurs and sort of the broader public in terms of the willingness to take on US beef when, of course, Australia produces so much of its own meat. Let's get some more markets analysis when it comes to all of the cross currents of trade and tariffs. Junbei Liu is a co-founder and lead portfolio manager at Tencave. Junbei, always great to have you with us.
Thank you.
Of course, there's always a trade headline to be contended with. We've seen some progress and movement this week, right? Does it make a difference to markets? Because at this point, I can't decide if they're sanguine about trade risks, positive about the progress being made, or it's becoming kind of decorrelated as the most relevant factor.
Yeah, look, the market seems to become a little bit immune to a lot of those trades. I think market has taken the view that, regardless of what it is, we are making steady, small, incremental sort of deals that's coming through. I think the most important, of course, is the trade deal between China and the US. But that, complete trade deal, you're not going to have it for potentially even years. We got a framework. So, I think constantly you get those small news flow coming through about small segments of the market that's being agreed on. So, and I think investors are happy with that at this stage.
Does the trade truce and whatever comes out of US-China, does it have a meaningful impact on how you view domestic equities?
Yeah, look, so I think for equities for Australia, right? So,
for China, but also for Australia as a proxy.
Sure. Yeah, so look, for China, I do think the equities at this stage is very much about the recovery of the China economic activity itself. Now, we've seen the economic activity actually hasn't been too bad so far because a lot of pull forwards in terms of exports and the like. In the second half, will be slowed down somewhat. However, we are seeing government making more incremental stimulus and the like to the consumer, and then we're seeing somewhat of a green shoot across that sector. So we do think that Chinese equity looks actually pretty good. And then what's interesting is that we are actually seeing increasing activity from the retail investors there in China. As you know, that's a very big part of the market, and that's usually a sign of consumer confidence than anything else.
And Junbei, what about Japanese stocks? Because, of course, we have seen the trade deal with the United States, but at the same time, 15% is still higher than what it was before. So can you still be optimistic about some of these earnings coming out of corporations that have already been hit by a lot of trade uncertainty?
Yeah, that's right. I do think that the market looks actually quite interesting because, we're talking about the carry trade now potentially back and remove a lot of those uncertainties. And then given if you look across the Asia Pac itself, it is a very more defensive market. With the recent pullback, it does look very interesting. But I would put on the scale in the Asia Pac, the Australia where we are, I do think our market looks, far more interesting. Not only we're a big dividend yield and defensive market, we actually have, decent tailwind in terms of domestic tailwind here in Australia because of the rate cut cycle, and that should actually drive a lot of our domestic cyclical here in Australia, deliver pretty strong earnings growth.
But Australia is not necessarily known for the big tech names that are all the rage right now, right? I mean, we saw some positive earnings from Alphabet, from Intel as well when it comes to AI spending. How much upside can some of these Northeast Asian markets get given how heavily exposed they are to that sector?
Yeah, I do think this is quite interesting. If we talk about the sort of the sectors that we think would outperform significantly, we think it's actually the cyclical sector. We're already seeing in the marketplace where there's broadening out of the the return. People going to small cap, people going to more of the more cyclical. So companies benefiting from increasing earnings because of the the increasing economic activity. With the tech sector, you're very right. There's increasing capex. We just heard from the big tech giant. So in that whole supply chain is very interesting. Australia is very small on that, but I do think that given the valuation differential between the U.S. tech and some of the Asian one, I think they look quite interesting for the next year to come.
When it comes to Fed expectations, do you think the market is still overdoing it?
Yeah, look, Fed is trying to work. Market is expecting about 3 rate cuts, and I think potentially it could be on the bullish side. Fed has made it quite clear that, look, it is going to be a bit data dependent. And so far, we started seeing a little bit of a inflation pickup because of the, very early sign because of the tariff. I think it's still wait and see. We're still thinking potentially, there's a good probability for a rate cut in September, but we have to see what happens.
Junbei Liu, good to have you back, co-founder and lead portfolio manager at 10Cap. Of course, we were just talking about those big tech giants, and I mentioned Intel and their positive outlook when it comes to their sales forecasts. They are now seeing that PC demand picking up. The industry is doing well, but we did see that downside pressure on Intel in the after-hour session after the CEO sort of struggled to show that their turnaround is on track. You can see some of those suppliers falling today. We'll have more on tech later this hour, and we take a deep dive into Samsung. In the second episode of Bloomberg Tech Asia, we have an exclusive interview with Samsung President Won-Joon about how the world's largest electronics empire is navigating global tariffs. But first, EU chief Ursula von der Leyen is urging China to open its markets and tackle overcapacity after leaving Beijing this week with little headway on a trade deal. More on that story next. This is Bloomberg.
As our cooperation has deepened, so have the imbalances. We have reached an inflection point. Rebalancing our bilateral relation is essential. Because to be sustainable, the relations need to be mutually beneficial.
European Commission President Ursula von der Leyen speaking to Chinese President Xi Jinping in Beijing. This was the first in-person summit since 2023. Let's bring in our China correspondent Bingbin Lo for the latest here. Bingbin, so the relationship here pretty strained and the trade imbalance really not helping.
Yes, the trade imbalance has been worsening actually this year because of those trade tariffs with the United States, causing Chinese exporters to find new markets in other places like the EU. And so the trade surplus that China has with the EU has reached close to $150 billion, which is a record high in the first half of this year. And that is, according to Ursula von der Leyen, critically imbalanced. And she's asking China to open up its market even more to address some of the issues like overcapacity. Otherwise, she says the EU will not be able to maintain the same level of openness that it has maintained before. But President Xi also calling on the EU to open up its trade and investment markets and also to create a more friendly environment for Chinese businesses and to stop using these punitive or restrictive measures against China. And this comes as both sides has had, all these clashes when it comes to the dumping of Chinese EVs, for example, the tariffs being placed on Chinese EVs. The EU has banned Chinese medical devices manufacturer from participating in these public procurement contracts. And right now, both sides had agreed on a mechanism to address bottlenecks when it comes to export controls of critical minerals. China has agreed to reciprocity when it comes to public procurement contracts, but nothing very concrete in terms of whether or not this would eventually lead to rolling back of some of the restrictions that we have seen so far or the lowering of tariffs on Chinese EVs.
Beijing's position when it comes to the Russia-Ukraine war has been also quite interesting and a very fine balancing act, right? Have we seen much of a push from the EU for it to do more? Have we seen any agreement on that front?
Yes, the EU is once again pushing China to use its leverage on Moscow to try to end that war in Ukraine. But China simply says that it supports a political settlement to any international dispute. So a bit of a vague sort of sentence there, not a strong commitment from China. And we also know previously, and this was reported by SEMP, that the Chinese foreign minister in his recent visit to Europe had told Kaja Kallas, the top EU diplomat, that China doesn't want to see Russia lose that war because it could mean that it would shift the entire focus of the U.S. to China. So it could be a strategic decision on China's part, but at the same time, the foreign minister was very clear in denying any material or military support to Russia, saying that if China had been supporting Russia, that war would have ended much earlier. So they're playing a very fine line here, but it seems like China at this point is still unwilling or unable to do more to exert pressure on Russia to end that war in the very near term.
Bloomberg China correspondent Min Lo there, and let's stay with geopolitics because the UN Security Council will reportedly meet on Friday to discuss the rapid escalation in the border conflict between Thailand and Cambodia. At least 14 people were killed on Thursday when Thai fighter jets struck Cambodian military targets, and both sides traded fire across the border. Bloomberg's Avril Hong joins us from Singapore. And Avril, we know that this is the worst violence the two sides have seen in over a decade. What do we know?
Yeah, this has been a long simmering tension. Things have actually been quite calm since 2011, but it took a turn for the worse with a deadly clash in May. And since then, both sides have been massing troops across the border. And we've also seen this massive political fallout in Thailand. And then this week, things took a further turn for the worse, with Thai soldiers getting injured in a landmine explosion. We've seen the fighting really escalate in the past day very sharply as both sides traded heavy fire. And then we also saw it kind of culminating in Thailand using F-16s to strike Cambodian military posts. Both sides have since said that the other side actually fired first. We're also hearing that the UN Security Council could be meeting today on the conflict. Now, it's worth noting that Thailand is seen as having a sort of military edge amid all this. It has been a longtime ally of the US and has 2 squadrons of F-16s, Lockheed Martin F-16s, while for Cambodia at this point, in terms of its air assets, it's not seen as having the assets that would be able to counter Thailand's advanced jets, even though it's known to possess Chinese-made air defense systems. So this is where we stand in terms of the conflict so far.
What's the risk of spillover?
Yeah, I think the risk at this stage is relatively contained, relatively low. The worry is that if the border dispute is left unchecked, given this sharp escalation in fighting, that it could go on to further disrupt the movement of people, of trade, and that would drag growth. I think Bloomberg Intelligence also put out a note about implications for commercial airlines if airspace is closed. And of course, I think overall, the concern is as well that this could prove a sort of distraction for leaders from both sides. Remember, both Thailand and Cambodia could face 36% tariffs come August 1st because of the absence of any form of trade deals. And this, for Thailand, you've already been seeing investors reacting. We saw Thai stocks already this year performing really badly, under pressure this week. The Thai baht, which only recently reached the highest levels since 2022, also saw a bit of a dip amid the conflict.
Avril Hong there with the latest on Thailand and Cambodia. And these are some of the other geopolitical stories that we're following. Israel and the U.S. withdrawing teams from ceasefire negotiations with Hamas, citing the group's unwillingness to agree to terms. President Trump's envoy Steve Witkoff says that Hamas showed a lack of desire to end the war. Israel's Benjamin Netanyahu has said that any deal must include Hamas surrendering and giving up control of Gaza. Talks had aimed to secure a 60-day truce and the release of remaining hostages. French President Emmanuel Macron says France will officially recognize a Palestinian state, becoming the first G7 nation to do so. He announced the move ahead of a planned speech at the UN General Assembly in September. Macron says France remains committed to what he describes as a just and durable peace, while calling for an urgent ceasefire.
Let's take a look at how European futures are shaping up at the moment. And we're seeing a little bit of a wavering when it comes to risk sentiment. That's really been passed through in the Asian session as well, as stocks here continue to see some slipping there, even as, of course, we saw US stocks being propelled by tech. Still, this is the picture when it comes to Euro Stoxx 50 futures, looking a little bit softer. German DAX futures also off by just about 0.1%. We're still seeing that resilience when it comes to the euro, though. We did see 2 days of pretty good gains when it comes to European stocks, with upbeat quarterly results driving some of that. We're still watching progress being made when it comes to EU as well as US trade talks, but we know that there's contingency countermeasures being prepared there as well. And a lot of analysts are saying that there is an assumption that a trade deal is not too far off, and that is sort of contributing to that optimism. But that is a little bit of a fade that we see at the moment. Financials, one to watch, given that we've seen over the past couple of days the likes of Deutsche Bank soaring to a 10-year high after some pretty impressive earnings beats. More ahead on the Asia trade. This is Bloomberg.
Some wonderful engagement with my friend and colleague from the US, the Commerce Secretary, Mr. Howard Lutnick, the United States Trade Representative, Ambassador Jameson Greer are both very dear friends, and I'm sure we are looking at a great business with the United States in the years to come.
You've managed to ink some really key concessions, especially on the national insurance payments front. Are you hearing from companies that they want to increase investments in the UK as a result? And if so, where?
Well, I think Indian business is very excited that we've got the free trade agreement in place. We've got the double contribution convention in place. Indian businesses have been very bullish on the UK. And if one looks at the investments flowing in from India to UK, it's a tad more than the other way around. So I think this will also encourage greater investments because of the stable and predictable environment, business environment. It will also open the doors for more robust and resilient supply chains. It will ensure that we can both work as trusted partners, expanding trade in goods, in services. I think Prime Minister Narendra Modi and Prime Minister Keith Starmer both very clearly recognize and articulated today that this is a milestone and historic achievement which will hold good stead as we double our trade, as we grow our jobs in both countries, it's a win-win for both UK and India.
Are any big Indian conglomerates already planning that expansion?
I think we saw, for example, the Bharti Group become the single largest investor in British Telecom.
Yeah.
Clearly a sign that there is trust between businesses on both sides. In fact, they are also a major part of the OneWeb. Yeah. We are aware that many pharma companies, many IT companies already have a significant presence in the UK. Companies working on pesticides and chemicals and very many sectors are looking at the UK as a possible center both for goods and for services.
The other talks were, of course, ongoing on the bilateral investment treaty. Can I ask, what are the sticking points remaining on that?
Well,
and
I think
would
negotiations
you like to see?
happen in the negotiating room. We don't discuss that in the media. But I do hope we will get that also across the hump soon.
And are there any concerns, especially for Indian generics makers, or in terms of dumping from India, that are still there, or have those all been resolved?
Well, in fact, we were being wrongly classified as a country which had any problems with our patent and our IP regime.
Yeah.
We were able to have very, very good discussions with the pharma companies, with all the stakeholders, both in India and in other parts of the world. Concerns that came to our attention which merited any change have been addressed, and which has given a big boost to patent filing, faster clearances. In fact, in the last 2 years, we've done nearly 160,000 patents being issued, so much so that we don't have much of a backlog left anymore. And I think we've been able to create a trusted atmosphere with fast-track clearances. And we now have a robust intellectual property rights chapter, both with Switzerland and with UK. Two countries which always used to be at the forefront of innovation.
Indian Commerce Minister Piyush Goyal speaking to Bloomberg's Ruth David there. And take a look at some of the big movers in the Japanese session. Mitsubishi Motors losing more than 8%. It actually missed on its operating income. And of course, we have seen those auto tariffs on Japan hitting this company hard. Now we've got a 15% tariff rate, so we'll see how the company does going forward. But Renesas also falling at the moment. Their non-GAAP revenue at 330 billion yen, which came in slightly below expectations. And of course, this is also a company in the automotive sector and the chip maker really suffering when it comes to supplying to those cars. Nidec, though, gaining ground. It actually beat expectations on operating profit at 61.5 billion yen. That's it from the Asia Trade. Bloomberg Tech Asia is next. This is Bloomberg.